This is The Markets. I'm Mike Washington. Today is April 8th, and I'm on the Goldman Sachs equities trading floor, joined by my colleague, Lee Coppersmith. Lee co-runs New York equity derivative sales and global banking and markets. Lee, thanks for joining me.
Thanks, Mike. Appreciate it.
So, ceasefire, these headlines that we got overnight of a 2-week ceasefire. Clients have been not necessarily positioned for this type of headline, which is why you're seeing the gap higher over these last few weeks. On the macro side, you've seen fairly aggressive shorting in the macro community to protect downside. What do you make of the backdrop that we found ourselves into ahead of the headlines last night?
Yeah, so what I would say is that it's been a very challenging environment for the institutional community that we mostly talk to, right? And so what's defined, call it the last month or so, has been an environment where clients have felt like they need to de-risk. And that's really been led by a lot of shorting in macro products. And, what does that mean? That means in equity futures, in ETFs, and we've seen it also in our options space where people have been buying a lot more volatility through index option puts.
Yeah, I mean, that all makes sense. And then so fast forward, now we see today's price action up, 2.5%, 3%. Is there still a wall of worry that we need to climb? Are we getting towards the end of these Middle East tensions, or are investors still truly worried about the forward and needing to hold on to these tail risk hedges to the downside?
I think there is a wall of worry. Now, we have seen a pretty large reset in the geopolitical volatility risk premium that was once associated with the market when we were trading 5% lower. But what I would tell you is that the level of positioning today is still much more friendly and conducive for the market continuing to rally versus where we were, call it, around quarter end. And so I do think for clients, there hasn't even been enough time to fully digest the ramifications of what the ceasefire might mean. And so given the backdrop of where they now are, I think the right tail has actually intensified from them because they feel like they have actually taken down exposures to a level where they'll miss out if the market were to continue rallying.
Yeah, almost a FOMO trade.
Yeah.
I think one thing that stood out this year too, and you've pointed this out a ton, has been the resiliency at the index level, but it's not telling the story about what's actually happening under the hood. Some of this single stock volatility has been substantial. How would you characterize that? What's standing out, and why is that happening?
Yeah, so for most of this year already, the biggest buzzword has been dispersion, right? And so what has that kind of meant? The playbook that's really worked really well through most of this year has been one of long single stock options and against it short index volatility. And so why are people doing that, right? People have been doing that mainly because they want to express their core thematic views in the single stock world where they can get the idiosyncratic exposure while trying to obviously neutralize any kind of broader market impact. And for a lot of this year, that was a great playbook. But what happened obviously when you kind of introduced the macro concerns that we saw now in the last month, it interrupted a lot of what people were really comfortable expressing. And so what happened was you saw a big spike in index volatility, which eradicated a lot of the performance in that dispersion strategy or that environment as a whole. And in turn, also helped force a lot of the unwinds we then saw both at the thematic level, but also in the options market because people really couldn't feel comfortable holding the same levels of exposure they once had in the volatility space.
Yeah, there's so many technical dynamics that are at play in the market as a result of those points that you just made. And one other thing that stood out to me was that mega cap tech single stock vol versus the rest of S&P single stock vol has been completely blown out, where you're actually, it's cheap to buy vol in mega cap tech versus single stock. Does that pose as an opportunity in your eyes? Is tech outright, just from a delta perspective, going to be an outperformer in mega cap tech? What do you make of that?
Yeah, so the observation I would make is you haven't seen this at any other time outside of March 2020 during COVID, right? And so during that span, just like today, what it kind of really revealed was that the market had lost its confidence in those Mag 7 stocks as being the leaders. And so I would tell you that I think if you were to, see what happened back then, obviously post-COVID, obviously the reemergence of those companies took place, and it was a really great opportunity to be putting on those upside expressions, particularly in those companies, whether you did them outright or if you did them versus the rest of the market, right? And so what we would say today to clients is that if you wanted to basically look at ways to raise your exposure to the broader market as a whole, after a month of basically de-risking, this presents another really attractive opportunity for clients to use those expressions as a way to get longer on the market as a whole.
Yeah. So packages up. We've had, multiple weeks of net selling across our prime books. There's been a ton of dislocations. We're now gapping higher on the back of these headlines. What pockets of the market through all of this are now standing out to you as attractive?
Yeah. So what I would characterize the last month is really one where people took down a lot of their cyclical exposure, right? Because that's obviously what was most at risk from the macroeconomic shocks we just witnessed. But what people tried to hold on to as much as they could was their secular winners, right? The ones that obviously have those single stock stories that are more associated with longer term positive fundamentals. And so what I would tell you is that the first step in this equation, what clients are looking to do, is first take down some of the short exposure you earlier mentioned. And that way they can get longer the market. But then number two is they want to look at ways to kind of get back into the full level of length they once had in some of those core secular winners, right? And so what does that mean? I would say people have not lost much confidence in the AI theme. It's obviously evolved from where it was since the debut of ChatGPT, but I would say we're now at a place in time where people want to own it on a barbell level, right? So they want to own both the inputs into AI through the infrastructure plays, but they also want to own the outputs in the AI, which means the transport companies, the infrastructure that actually then leads to obviously productivity booms. And so what I would tell you is that people want to own the inputs and they want to own the outputs.
Yeah. Awesome. And so what are you going to be looking at in the weeks ahead? Earnings are right around the corner.
So earnings is obviously the marquee catalyst, I would say, that kicks off next week that we can tangibly look to, right? And so far this year, earnings revisions have been incredibly resilient despite what's gone on in the last, call it, month or so. And so what we're really going to look to see from corporates is to see that confidence level is sustained. We think it will be, right? We think, obviously, given this kind of going into the back burner on the conflict side, that you can refocus on the real drivers behind what has always kind of been the case in the last, call it, few years, which is the resiliency of corporate America. And so what we're looking for is obviously another low bar, given where positioning now sits, and hopefully enough confidence that comes through from these companies really kind of continuing to commit to the same trends we've been seeing, honestly, for the last few years.
So given some of these dislocations that we've seen over these last few weeks, like, is Mag 7 actually a buy here and you see an opportunity?
I think it is. I think both locally here and over the medium term, the level of valuations, the light positioning, and the fundamentals that have always kind of been associated with these companies all remain incredibly friendly. And so to put it all in a one wrap, I think honestly clients should be looking at expressing a lot of this upside through the call options market, and
which is cheap, as you mentioned,
which is reset a lot lower into what should be a pretty catalyst-rich season for these companies.
Lee, a lot going on. Always appreciate your insights. Thanks for being here.
Thanks, Mike.
And that does it for this week's episode of The Markets. I'm Mike Washington. Thanks for listening.
The opinions and views expressed herein are as of the date of publication, subject to change without notice, and may not necessarily reflect the institutional views of Goldman Sachs or its affiliates. The material provided is intended for informational purposes only and does not constitute investment advice, a recommendation from any Goldman Sachs entity to take any particular action, or an offer or solicitation to purchase or sell any securities or financial products. This material may contain forward-looking statements. Past performance is not indicative of future results. Neither Goldman Sachs nor any of its affiliates make any representations or warranties, expressed or implied, as to the accuracy or completeness of the statements or information contained herein, and disclaim any liability whatsoever for reliance on such information for any purpose. Each name of a third-party organization mentioned is the property of the company to which it relates, is used here strictly for informational and identification purposes only, and is not used to imply any ownership or license rights between any such company and Goldman Sachs. A transcript is provided for convenience and may differ from the original video or audio content. Goldman Sachs is not responsible for any errors in the transcript. This material should not be copied, distributed, published, or reproduced in whole or in part, or disclosed by any recipient to any other person without the express written consent of Goldman Sachs. Copyright 2026 Goldman Sachs. All rights reserved.